and I'm going to post this. So welcome guys again. Like I said, today we are going to cover a very interesting topic. Actually, some people may find it a little bit boring, but it is something you need to learn and to use it. So time frame alignment. Excuse my handwriting. All right. I hope my screen is visible clearly and you can hear my voice clearly. Right? I hope you can hear my voice and you can see my screen perfectly. Good, 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 good.
Yes, loud and clear, sir. Go ahead.
All right. Now, this is one of the lessons in my full mentorship program. And the way I'm going to teach you today is very simple. And I hope it's going to help somebody in the trading career. Now, time frame. Time frame is very important. Why? Because we are dealing with something called time and price. Now, we always talk about price, the price action, the structures and all that thing, but we don't normally or usually talk about time. Now, I'm going to teach you something very simple, but very, 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 very important. Now, the problem with most traders is to identify time frame in two ways. First, the leading time frame, and the time frame that follows the instruction from the leading time frame. To differentiate these two things, now bear with me here. Like I said, this is a little bit boring, but it's very, very important. The problem with most traders is to identify where to start. Where should I, which time frame should I use as the major time frame? Which time frame should I use for entries? I know that everybody knows, but which time frame should I look for trend also? Now, before I get into the time frame, I want to give you a little bit of why did I came up with this thing. So one day I you know, my one of my mentor taught me this, and I begin to see when you put, especially when you're using MT5 or MT4, when you put those period separators, okay, when you put those period separators, I don't know if you know about period separators. When you put those period separators, these things here, you may notice if you're using 1 hour time frame, inside the period separator from one point to another, that makes the 1 hour candles makes a daily daily candle. So from that distance, from point A to B, makes a what? A daily candle. If you put 1 hour time frame. From one period separator to another, that makes a daily time frame. I mean a daily candle. But if you are using, for example, a 4-hour candle, from one period separator to another, inside here, this makes a weekly candle. So from one period separator to another, that makes a weekly candle. And so on. If you use a daily candle, I mean daily time frame, from one period separator to another makes a monthly candle. So all this price action inside with from one period separator to another, it makes a monthly candle. Now I begin to see now if this period separator relate in these terms. So that makes a thing called time frame coordination, right? So this time frame coordinate in this sense, meaning a price cycle of a 1 hour time frame makes a daily candle. Price cycle of a 4-hour time frame makes a what? A weekly candle, and so on. A daily makes a what? A monthly candle. Now you may realize, why am I not talking about maybe the 15 minutes or the 30 minutes? Now just bear with me here. I'm gonna reveal something very shocking, very shocking. Now that makes a coordination, okay? A coordination. So what is that coordination are we talking about here? So you may realize we have two groups of time frame. The time frames that we are looking for a cycle of price, and the time frame that we are looking for a completion, maybe of a completion, or what do I don't know how I can put this. So we have two groups here. The lower time frame, which is the 1 hour, the 4-hour, and the daily. And we have the higher time frame, which is the daily time frame, the weekly time frame, and the monthly. Okay, now like I said, I left those lower time frame, which is the 30 minutes, the 15. We're not talking about that first. I'm going to talk about that later. Now in this sense, you may find one time frame repeating in both group, which is the daily. You can see in the higher time frame and in the lower time frames. The daily appear in both groups. Now if daily appears in both groups, that makes something interesting. Okay, so I came up with a time frame coordination, which I don't know if you know about this. So we have the general time frame coordination, which has two series, the monthly and the weekly time frame. and everybody knows that the monthly coordinate with the daily, and then the 1 hour, the 15 minutes, and of course in the weekly series we have the 4 hour, the 30 minutes, and the 5 minutes, and of course we have the universal time frame, which is the 5, 3, and 1. So I know everybody knows about this. If you don't know about this, in my YouTube channel I talked about time frame coordination. Go there and learn. But I came up with another time frame coordination, which to my side I call it simplified time frame coordination. Simplified time frame coordination. Now, in simplified time frame coordination, we have only two groups of time frame, which is the okay, so we have the monthly, the weekly, the daily, the 4 hour, and the 1 hour, and these are divided into two groups. Okay, the first group is the higher time frame, like I said, which is the monthly and the weekly, and the second group is the lower time frame, which is the 4 hour and the 1 hour. And the daily, because it appears in both groups here, this is like a portal. My mentor taught me this daily time frame is a portal, and next time I'm going to reveal the secrets of the daily time frame. I'm going to reveal in the next, maybe the next session, we're going to talk about the daily time frame. There is something very interesting in the daily time frame. So why do I call it the portal? Sometimes you may use this as the higher time frame, and sometimes you can use it as the lower time frame. And the lower time frame can be used as entry time frame, and also can be used as confirmation time frame for the lower time frame, which is the 30, the 15 minutes, and so on. So daily time frame can act in both groups. Okay, in both groups. Now from here, now I came up with something very interesting, which is inside this simplified time frame coordination, my rule, and I think this is where we are lacking as traders. Every trader must have at least 3 time frames before entering any position. You must have at least 3 time frames. What do I mean by this? The first time frame, which is the higher time frame, okay, this is number 1. Number 2, I call it the confirmation time frame, okay, and number 3 is entry time frame. So every trader, you must have these 3 time frames. You must have these 3 time frames. Okay, now the higher time frame, what do we look in the higher time frame? In the higher time frame, we are going to look for the bias. Some people call it directional bias. So we are going to look for bias, okay, the direction, the yes, the direction, let me put it that way. In the confirmation time frame, we're going to look first the confirmation, okay, first the confirmation, and also we are going to look for something called transition, and of course we are going to look for trend. Now I'm going to talk something here. Some people may find it stupid, but it is important. Just listen and go on and apply it to your own session. Now, in the entry time frame, of course, we are going to look for areas where we can place our orders and press our position. We're going to look for entries. Now, I'm going to talk about my system. How do I use this time frame alignment? So like I said, every trader has to make sure you have 3 time frame before entering any position. So to my side now, I have this system which I use most of the time. According to simplified time frame coordination, my system of trading is very simple. So from the monthly, we have daily and we have 1 hour, okay? But also we have the weekly and the 4-hour time frame. I put this between, I have something, I need to talk about something. So I put this between the monthly and the daily because this weekly is between the monthly and the daily, and of course the 4-hour is between the daily and the what? The 1 hour. This time frame here, I call it load blocks. Okay, load blocks. Why? Because obviously sometimes okay, let me put it this way. So sometimes you may find there are 2 types of load blocks. The one which prevents you from continuation, and the one that support you from continuation. What do I mean by this? So you may find an area of liquidity like this, and you enter, for example, a trade, but that trade does not continue further, and then the price goes down like this. Why? Because maybe price entered in a certain area of liquidity, and that area of liquidity act as a load block. So this is a load block that prevents you from continuation. All right, but another type of load block is where you find you enter a trade here, and then you find another structure that supports you for continuation. I'm not going to talk about this today because this is something premium stuff. I'm not going to talk about this. Something very premium. So so just know that these time frames act as load blocks. But to me, I always use weekly time frame because I am a structural trader. I don't hold entries for a long time. Okay, I just want to find an entry, get my money, and go away. So I use weekly time frame the most, and I use this looking for major key levels, looking for areas of liquidity, and so on and so on. So this time frame can coordinate like this. Why? If you use weekly time frame, where are you going to confirm this time frame? the information. You're going to confirm those information in the daily time frame. Why? Because daily time frame is a portal time frame that appears in both groups, like I said. And the secret of the daily time frame is this. The daily time frame, we use it first to look for something called POI, or some people call it areas of liquidity, point of interest or areas of liquidity. And another thing, we look for trend. Now here's where I wanted to talk a little bit. And lastly, we can also look for entries in the daily time frame. Now, why do I say trend in the daily time frame? Listen, guys, if someone tells you the market is in a bullish trend and that trader shows you the structure of a 1 hour chart, or maybe a 15 minutes, or maybe a 4 hour chart, and that trader tells you this is the bullish trend, you are wrong. The only time frame that we look for trend is daily. Now I'm gonna be this may create a lot of argument. Every trader has its own perception, but to my knowledge, the only time frame that we look for trend is daily time frame. Is daily time frame. Why? Because all these lower time frames, the only function that they do is to obey the higher time frames. And in this case, the higher time frame is from the daily to the monthly. So the only time frame that you have to look for trend is the daily, because the daily appears in both the higher time frame and the lower time frame. So like I said, I'm going to create another session for just daily time frame, the secrets about the daily time frame and how to use the daily time frame in your advantage. That will be another session. So guys, you need to have at least 3 time frames. The one which you will look for the bias or the direction, the one which we're going to confirm the information that you got in the higher time frame, and the one which we are going to look for entries. Okay, for entries. So this is very important. So this is I'm going to give you some of the examples to clarify this. Now, last thing that I want to cover here. So I talked about this coordination here and this coordination here, which everybody knows. Now, what if, this simplified coordination here cannot satisfy every type of trader. So we have the swing traders, we have the scalpers, and we have intradays, day traders. So this may be not very functional to some of the traders. For example, the scalpers, this will be very stupid to use this time frame. But so how are we going to solve this problem? Is by using this general coordination. How are we going to use this? Here is the answer. So we see we have different types of traders. We have the swingers, and of course we have positional traders and all that. But we're going to talk about the only three which are commonly known. So we have the swing traders, we have the day traders, okay? We have the day traders, and we have lastly scalpers. So if you are a swing trader, meaning you are going to use we are going to hold trades for a long time, so your time frame coordination will lie the same as the general coordination says. So if you're using the monthly series, you're going to use the monthly, the daily, the 1 hour, and the 15 minutes. If you're using the weekly series, you're going to use the weekly, the 4 hour, and 30 minutes, and 5. If you are a day trader, now here you're going to start. If you're using the monthly series, you're going to start from the daily time frame. So your coordination will start from the daily time frame as your higher time frame, looking for the direction, the bias, and you're going to confirm those ideas from the daily to the 1 hour and the 15 minutes. To complete the cycle, you're going to add one time frame, which is the 5 minutes. If you're using the monthly series, if you're using the weekly series, you're going to start from the 4 hour, then the 30 minutes, then the 5, and to add one time frame for refinement, we're going to use the 3 minutes. And if you are a scalper, you're going to start from the 1 hour if you're using the monthly series, then the 15 minutes, then the 5, the 3 to add the refinement time frame. And then if you're using the weekly series, you're going to start from the 30 minutes, then 5, then 3 to 1. So these are the time frame coordination of these traders. If you are a scalper and you use day traders time frame to scalp, you are wrong. If you want to scalp and you are using swing traders time frame to scalp, you'll be wrong. So this is how we do it. So I am a day trader, so I use these time frames to trade. It doesn't matter it is gold or currency pairs, crypto. You can use this to trade, right? So this is how time frame we can define also this type of traders according to time frame. But if you want to use that simplified time frame coordination, this one here, it may be not suitable to use this time frame coordination in some of the pairs such as gold, the pairs that have high pip value. I don't know if you understand when I talk about high pip value. So I always use this in pairs which have low pip value. I take entries in this time frame. My analysis appear in this time frame. So this is how we define time frame. If you want to learn more about this, there is a lesson in my YouTube channel. So let's go to the chart and try to clarify this a little bit more. All right, so let me pick one of the pair here. So this is Euro USD. Okay, so what I wanted to emphasize today is how are you going to align this time frame in your advantage. Like I said, you have to remember this. Every trader has to have at least 3 time frame before entering a trade. So how am I going to use this time frame to trade? So I'm going to reveal my system of trading, and then you will go to practice on your own and see if it works or not. And see if it works or not. So I always begin to look the higher time frame first, because every structure you see from the 15 minutes, maybe the 30 minutes, the 1 hour, it doesn't matter, because they only follow what the higher time frame says. So I look first for the weekly time frame. So in the higher time frame, what do I look? So these are the questions that I'm going to answer. What do I look in the higher time frame? The first thing that I look is structure, is the structures. I look for structures. So I look for the overall structure and the current structure. So you can see here we have the major structure here. Okay, this was the major structure, and of course we have minor structures inside in the same time frame. We have that small structure there, and of course we have nearby structures, which is this one. Looks like a structure, marking those major key levels. Okay, so I look first for the structures, and the second thing, I look for candlesticks closure, because candlesticks can tell you a lot. So after looking for the structure, you go to look for the candlesticks. How did these candlesticks, the current candles, not the overall candles, the current candles, how did they close? So you begin to see, for example, currently here, this is weekly time frame. This is the last week, okay, the previous week. Now you see the way it closed bullish, and it left us with the candlestick, the week rejection below, and of course we have this structure here, the weekly structure, meaning now the price is about to enter in the area of liquidity, which is this one, this whole structure here. So from the weekly time frame, I begin to see now, okay, the next week I may be looking for the bullish momentum towards this area of liquidity, towards these levels. Now, in order to confirm this information, I need to go to the confirmation time frame, which is, to my side, the daily time frame. Now, in the daily time frame, I am going to look for three things. First of all, the trend. I'm going to see, okay, what trend am I in? We're in the bearish trend, actually. We're in the bearish trend. Okay, so we have this structure here. We are bearish. And the second thing, I'm going to look for momentum. So we are in the bearish, but the candlestick momentum says that we are in what? In the bullish. Why? Because we see it's like a retracement. Okay, so for those who understand market phases, for those who learn about the market phases, this is like a counter phase, the retracement. So we are bullish in terms of momentum. So if the next week opens and the daily time frame confirms this momentum, I need to look to see, okay, where is the what? The direction, the will be the target. So I mark the areas where I'll be targeting. For example, this is the level here, this is the level here, this is the level here. So these are the areas which I'll be looking for the candle closure in the daily time frame. So if the daily time frame comes here and reject this level, I'll be looking for sell entries. If it closes above, I'll continue looking for the buy entries. And then from there, now I can go to the lower time frame to look for entries, maybe the 4 hour, the 1 hour, and so on and so on. So this is how I do all the time. All the time. I have to align the time frame. I have to record the information clearly, because if you mess up in the higher time frame, the lower time frame will be so difficult. You may find, okay, the sell entries, and then boom, the market buys. You may find the buy entries, and then boom, the market sells. Why? Because you don't compile the higher time frames to the lower time frame. So I don't know if somebody get the point or not. Like I said, this lesson is always boring because people like to learn about how to make entries, fascinating entries and all that, but they don't learn about this basics information, which is very important. Very, very important. So I always start from the weekly time frame, looking for areas of liquidity, looking for the structure and candlestick formations, and then from there I confirm that information to the daily time frame, and then after confirming in the daily time frame, I look for the confirmation in terms of area of liquidity, in terms of trend, and in terms of entry areas. And then from there I go to the lower time frame, which is the 4 hour or the 1 hour, and then boom. So you may be asking, what are the use of this time frame, maybe the 30 minutes, the 15 minutes? Where do I use it for? So you may notice the 1 hour and the 4 hour are the entry time, but sometimes you may find areas where you want to place an order in this time frame, are very, very risky, meaning they have maybe huge pips to risk, maybe over 20 pips of risking and all that. So in order to reduce that risk, you are allowed now to go to these lower time frames to refine those entry points. So that is how we use this lower time frame, which we call them lower time frame, the 15 minutes and 30 minutes and 5 minutes for that. Only refinement. Okay, but if you are in case of scalping, we said the scalpers, they may start the analysis in the 1 hour, which is good, but the problem of the scalping is sometimes you may find a structure that supports a sell entry, but the price failed to sell and then goes to buy. For example, this one here, this is 1 hour chart, and this one here was a beautiful structure for someone to sell. But why did price goes all the way up? Why did the price go all the way up? So these are the issues you need to consider. Okay, so you can see here the problem started in the daily time frame. So that one was this beautiful structure to sell, but in the daily time frame, can someone answer me this question? Okay, I remember last time I gave out a question like this, and I gifted one member something. I don't know if he's here. Somebody called Kim. Are you here? Somebody called Kim. I gifted some. So this will be the question. In the 1 hour, we see a beautiful structure to sell, meaning we were waiting for the price to come in his side here and take our entries, and then boom, to sell. But price went all the way up. The problem here was in the daily time frame. Now I'm asking, what was the reason for the price to buy according to the daily time frame situation here? Can someone answer? If someone give me a good answer.
So can I try? Can I try?
Yes, who is this?
Uh, this Prashant.
Oh, okay. Give me
Okay, so I
an
can
answer.
see the price break the daily key levels, and it's a breakout of the daily key level as based on the open close factor. And next day price open, goes down, take a support of the previous resistance and push up.
Okay, that may be an answer, but that is not an answer I'm looking for. You may try again.
Okay, no problem. Sure.
Can someone give me an answer? I've already talked about this in my YouTube channel, in my free sessions here. I've already talked about this. Can someone give me an answer? If someone give me an answer, I'm going to gift one program of mine for free, like the last time.
On
Can you
YouTube, you
try?
said that there's a key levels open, every candle open, close, and uh, open, close, and low is very important to mark the key level.
All right. It's one of the reasons, but it's not the main reason.
I think the reason in daily time frame there's no clear structure.
Clear structure. Okay. Okay. No, no, no. It's not the reason, guys. The reason is very simple.
Let me try.
Okay, who is this now?
It's just the pullback. It's just a
Hello.
pullback to the selling zone.
The pullback. No, 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 no.
Yeah, that buys on daily. Okay.
Okay, it's good, but
I think
it's not the answer I'm looking for. Okay, you're saying
I think the answer the market failed to close body close, but it closed by weeks that down.
you're talking about this one here. Yeah. Okay, for those who speak Swahili, nimeuliza swali kwamba kulikuwa na structure nzuri hapa ya kusell, lakini price imebuy. Je, reason ni nini? Na reason inapatikana kwenye daily time frame ambayo ni hii hapa, hii tuko daily time frame. Je, nani anaweza kanipa reason ambayo why price buy hapa instead of selling kwenye hii structure ambayo ilikuwa ni structure nzuri kabisa, na mtu atakayeipatia nampatia zawadi. So can someone answer? Give me an answer. The answer is very simple, and the answer lies on
Can
the.
I give it a try?
Okay,
Can I,
one by one, please, one by one.
can I give it a try?
Okay.
Oh, okay. So, the first thing that I see there is one, we
Mm.
had a candlestick failure. If you look at um, that pin bar
Yeah.
at the bottom,
Yes.
yeah, we have a bullish pin bar. Therefore, to me, that's a candlestick failure. Two, we have those weekly overlaps that also failed to hold price.
Mm-hmm.
So when we go on to a lower time frame, like the daily, I mean the H1,
Mm-hmm.
if you go into the H1,
Mm-hmm.
the H1 time
This
frame,
is the H1.
yes, and we try to mark out that zone, we can see that price failed to hold and broke through. So to me, that was a flip zone. It's a flip zone. And maybe another added confirmation to add on to that,
Mm.
when price left some sort of zone after breaking through, that was retested.
All
In the
right.
process of price flipping bullish, it left a zone that was retested to buy. Yes, that's what I observed.
All right. Now, you talked a lot, but you gave the answer correctly, and the answer was the candlestick. I call it candlestick failure, meaning the candle here. This was the answer. This bullish candle here performed a candlestick failure at the bottom, creating a week to week breakout at the bottom. All right, and then the candle closed above. Although it didn't close 50% of this candle, but since this is the daily candle, you have to consider every information that you see. So this was the answer. And who answered that question? I need to know. Who answered that question?
I'm here.
Oh, Mr.
Check,
I'm here.
check
I'm
the
here.
message, mister. Check the message, mister.
Okay.
Yes.
Mr. Anonymous, right? Anonymous. Is that your name?
No, no, no. Not really. Not really.
All right. Okay, Bahati said market hemispheric will break structure by body. Yes. Also, Bahati, you gave a very nice answer. So we have two winners. Okay. So you guys will text me after the session. I will give you your gift.
On what? On WhatsApp or
Yeah, on
via
WhatsApp.
email?
On WhatsApp. I
Okay.
hope you have my
Okay.
numbers.
Yes, we do. Thank you.
So always you have to. I'm going to repeat it again because I I I talked about this. Always when you see candlestick failure like this here, always when you see this thing, even if you have a structure that support sell like this, you are not supposed to take that position until the market performs a confirmation entry. If not, you're not supposed to take that entry. Why? Because when market fail to close by body, the target always goes to the top here, the candle that was failed to be broken. I don't know if you're getting the point. I can give you another example. For example, in this situation here, also we had uh, we had a structure here. I think it was in 1 hour. Let me see. Another structure you can see here. This one. This was also a nice structure for us to buy. Okay, although it performed, it reacted a little bit, you can see, but it didn't hold for a long time, and then price goes down. Why? Because if you go to the daily time frame, you see price did not close by body. So if price did not close by body, it doesn't matter I have a structure. If that structure does not give me a confirmation entry, I don't enter. So you have to have rules. You have to have rules. And the only time frame that can give you this confidence is from the daily time frame. That's why I say we are going to have a session just to deal with the daily time frame. And you can use this in any asset. Maybe you're using if you are trading crypto, synthetic indices, if you are trading uh, currencies and commodity like me, I always trade gold. Yeah, you can use this. It is very, very, very important. It is very, very important. So that is what I do always. That is how I do always. So I hope I hope you are getting it. I hope you're getting it. na kwa wale ambao wananielewa kwa Kiswahili, najua tumeelewana japo kidogo. Sijabobwaja leo kwa Kiswahili. I'm very sorry about that. I used a lot of English today. So yeah, I hope we all got the point. So any question from there, from what we learned today? Any question? Any question from what we learned? No question. So everybody understood what we studied today. All right, that's the good news. If everybody understood, then boom.
May I have a question?
Okay.
You've said we can use from daily, we go to the 1 hour. My question, can't we try to mix some of those time frames? For example, I go from the daily to the 4 hour.
Yes, yes, yes. You know, the issue of people telling you must, if you go to the 1 hour, for example, you must go to the 15 minutes instead of the 30 minutes. Those are just mimics, I can say. You can go all the way from the daily to the 4 hour to the 1 hour. You can go all the way instead of jumping one another. For example, I can give you one of the example. I took an entry. I don't know if it was GBP USD, GBP JPY, or let me check here. There is one entry I took last week, I think, and I just went straight from the daily to the 4 hour. From the daily to the 4 hour. I don't know. It was something like let me check here. If not last week, maybe it was the previous one. Let me check quickly. Yeah, here. And this entry actually, it was very tricky, I can say. So you can see the entry was here. This is daily time frame. So you can see after I got, yeah, this was Euro USD. So after I got this information, like I talked about, the weak rejection, although we had a structure to buy, but due to this information here, I begin to see the next day closing by body and then confirming this information that okay, we are about to reverse. Okay, from there the only time frame I went was the 4 hour, and in the 4 hour you can see we had this structure breakout here, and straight I went for for this area as my entry point, and it was a nice trade actually. I risked almost 20 pips actually. I risked 20 pips. I hold it throughout the till the week ended on Friday somewhere here, making something like 100 pips. So you can see you can go all the way from weekly to daily, then daily to 4 hour, then 4 hour to 1 hour. It doesn't matter. The only thing that matter is if you see clear levels for you to place orders. If you don't see clear levels, then you go to the next time frame. That's 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 how I do. Yeah. I hope you got the point, Mr. Anonymous. Anonymous Savage. My guy, you need to change that name, man. It's very strange to me. Yeah, so that is how we do it. So another question, maybe anyone?
What unique things? Okay, thank you very much. Maybe this question may not be attributed to what we've discussed today.
Mm-hmm.
Um, some of us, yeah, uh, some of us, we've been trying to follow up on your content for a while on YouTube.
Yes.
The entry level types, are they five? Is do you still like trade those setups, those entry level types?
Of course, I
Type
trade a lot.
one.
Of course, I trade a lot, but nowadays I have my certain type of entries which is very unique and different from many of you. But those entry level type I use of a little bit, so it's not always. My ways of entering in the market is very strange sometimes. Sometimes I just enter due to due to um, the way market reacts towards the levels. Sometimes I enter due to um, what can I say? The volume. You know, sometimes volume can provide a unique entry. I don't know if you understand, but yeah, I have strange ways of entering in the market, but I teach my student some legit ways of entering, including level, breakout and retest in the levels, using those major key levels of entering, and many more, many more. I have so many ways of entering the market. I don't know if I can show you, or maybe next time we're gonna talk about entries. Yeah.
Yeah, because I know I'm not alone. We have very many on this call who have issues with entries. They
Yeah,
just don't want to speak out.
yeah. And the problem is people are trying to find the perfect way of entering. You know, when when you see people when you see people maybe entering a trade with zero drawdown, maybe the entry comes and taps like this and goes away. You see people are looking these types of entries like very unique. They need to study those entries. No, no, no. You need just to learn just a few ways of entering. For example, to me, the entry types that I use all the way, always, the first one, the first and always the, I mean, most of the time I use this is formation. I use formation. I use zone flip. I use um, I use those liquidity engineering and flips. Okay, and I use lastly I use some of SMC and ICT entries, some of them, very few, in very few, but you may come to realize formation, zone flip, and liquidity engineering, all these are just uh, uh, support and resistance entry criterias. Okay, yeah, somebody may you may be shocked about this information, but formations, liquidity engineering, zone flips, these are support and resistance breakout and retest entries. Yeah, we're gonna talk about that maybe next time, but I always use this type of entries. But you don't need to learn a lot of entries in order to be perfect in trading. My students, I always tell them, you need just to master 3 types of entries. 3 types of entries. Why? Because if one type of entry doesn't appear, another one will appear, and this is always. So you need just to master only 3. You know, there is one saying, I hope you know, and I hope everybody here knows Bruce Lee. Bruce Lee. I hope everyone knows Bruce Lee. Bruce Lee once said, you don't need to master 10,000 kicks. 10,000 kicks in order to defeat an enemy. You know, you only want you are supposed only to learn one kick, and practice that one kick 10,000 times in order to defeat the enemy. So you don't need to learn 10,000 entries. You just need to learn only few entries and practice that entries 10,000. For example, you may use maybe zone flip, for example, zone flip entries. Okay, inside zone flip we have 5 types of zone flip entries. So you can just use this type of entry, zone flip. You practice this 10,000 times, and then you'll see the difference. You'll be a lot better from those who learn maybe 10 types of entries and all that. So yeah, we maybe we'll find a time to learn about entries next time.
Okay, thank you very much.
Yeah. Okay, for those who speak Swahili, come on guys. Okay, I can see Sanga here. I can see some. Okay, Freddy. Yeah. Nafikiri tunaelewana guys. nafikiri tunaelewana japo leo ni unyenye tu.
Tunaelewana.
Okay, vizuri. Je, kuna maswali yoyote? Kuna maswali eh?
Kwa upande wangu mwalimu, hakuna swali.
Yeah, vizuri. So guys, thank you very much for today's session. So let me ask you guys, apart from the entries and all that, what should we do? What should we discuss on the next Saturday? What should we discuss in the next Saturday?
We can discuss about, I suggest we discuss about finding an edge and psychology management, risk management and psychology.
Okay, risk management. Risk management.
That's what I would suggest. I don't know others.
All right. Okay, somebody said top-down analysis. Top-down analysis. Okay. Uh-huh. Anyone? What can we discuss next session? All right. So we'll see. Okay, top-down analysis. This is a little bit simple. Let's talk about risk management next. But you know, I hate teaching risk management because this topic, you know why I hate teaching this? Because it's wrong to some point, because the examples that I'm going to give is what I do. And you know, I can teach you how to to trade $100 account, but you are going to use the strategies of trading $100 account in the $10 account. This is why I hate teaching risk management, because if you want to teach risk management, you need to give examples. And if you give examples and your student goes and put a different amount of capital using the same examples, you're going to give you're going to provide a virus that is uncurable. But the way I'm going to teach you risk management is very different to other mentors, maybe. Okay, we're gonna see about that. So yeah, we're gonna deal with risk management. Maybe also we'll see if we can switch to how to use daily time frame properly.